If we start focusing on the younger people, your banking relationship, your financial relationship should be like the circle of life. What if you offered to offset the student loan payment every month, but in exchange for that, they had to deposit the money. They had to save the money. So if the student loan payment was $100, if you make a $100 payment every month, we're going to wipe your student loan away. But now what you're doing is you're forcing them to take that same amount of money and save it. So now they're creating wealth. And now you know that about to get married, they bought an engagement ring. Are they going to look for a house? So you could start by being able to take them at that critical point when they're out of school. We have to work on how we fix that. And that should be where the relationship starts. But we're not doing any good if we're not all collectively figuring out how we get these kids out of student debt.
Pam Cytron has spent over 3 decades at the center of fintech and wealth innovation. From analog ledgers to AI-powered platforms, she's helped shape the systems that define how investors engage with money today. Pam leads the Founders Arena WealthTech accelerator in Arlington, Texas, where she works with early-stage companies bridging technology, investing, and generational wealth transfer. Pam's expertise explores the future of wealth, not just how it's built, but how it's passed on and redefined by new generations. Pam, welcome to the show.
Great to see you, and thank you for having me today.
I'd like to start with what wealth really means. You make a strong point that wealth is not just for the rich. How do you define wealth today?
I believe that wealth is uniquely defined by who we are and what that actually means to us and individuals. And I think that the perception of wealth is that it's rich. And I believe that the definition of wealth is really what that means to that human being and how you look at it. And not defined by the number of zeros in your bank account, but what that means, as well as how is the convergence of health and wealth now as we're going into the future. Also, balancing. I mean, I watch my own kids of where their priorities are, and they both saved money, but I also see different, kids are investing earlier than they ever have, right? So I think that wealth is a personal choice amongst people, and we should not define it by the number of digits that are associated with it, but what that means to us and our families and what we want to do.
That's a really good point. So in my head, wealth is really, whenever I'm talking to people, I always throw in however you choose to define it, and I think it truly is personal. I like how you're wording that. So let me ask, the people who don't really see themselves as wealthy, how can they begin reframing their mindset to build and protect what they have?
Yeah, I think first of all, part of what we continue to strive to do is look at tools. Okay. I also don't believe that our financial system is totally set up that is showing how you can grow wealth in smaller increments, right? I mean, I think we could all agree that the financial literacy in schools, I don't care if they're public or private, probably isn't where they need to be. Okay. I think there's a lack of education overall. I think our financial institutions haven't done that. I think we had hope that the Chimes of the world and the fintechs might do some of that. But along the way, they got faster and they got simpler and they got mobile. But they didn't really tell the story. We've actually gone backwards on, remember when, I'm old enough to know this, you might not be, you used to put your money Christmas time, right? You go to your bank and your bank would have a Christmas account, right? And then you go to the Christmas account, right? Now you got buy now, pay later. Okay. I think the worst invention on the planet next to 23andMe. But, we're teaching people buy now, pay later. We're actually putting them in debt. And think about it, right? So we're only going backwards and how people can create wealth. So that's part of the fun part about the Founders Arena. I continuously look for products and opportunities that can be deployed into different communities, because how you digest finance, how you digest what it is there. And think about it. Yes, we got robo-advisors. That was another big tank of an industry, right? I mean, a couple came out successful, but blew millions and millions of dollars of venture capital money there. But again, the robo-advisor was meant for people to do it on their own. But if you don't have a base of understanding literacy, if you don't have a base of understanding, getting into an early stage startup sometimes doesn't take a lot of money, but not everybody knows how to do that.
Right.
Right. And so people have gotten into just a little bit of the GoFundMe, but those are kind of different deals versus a WeFunder. But a WeFunder is still a accredited investor, right? So I believe that that's where our opportunity is. And kind of one of the reasons we started in WealthTech at the Founders Arena, because FinTech is a large category, is that because it is the root for all. It is an equalizer, but the tools and the sophistication are always focused on those that are running the most amount of money.
Sure.
Instead of giving tools that can give the incentive to do it. And we've seen some of those. We've got one in our cohort right now that's really focused on a very small category, a category of people that have historically not been as financially savvy as others.
Can you talk about an example of a product that would serve those that aren't typically served in this arena and help pull them into the
I'll give you two
successful wealth outcomes?
Out of Israel called Sequence.
Okay.
Was doing individual wealth management. We have a company called Quinn who is also going after that. And they're also a broker dealer. So they could do a little bit more than just a tech platform. And then we have a company right now called AlgoPair. And AlgoPair is going after college students, particularly athletes, in these programs that, you have, lower income, getting scholarships on that. So really working with the coaches and working with the school and working with the university to use the tool to educate, right? And then therefore be able to pass that business to something. So in the education part of that, it's going great. Coaches love it. Universities love it, right? But now we're working on the part that says, who wants those customers, right? Wealth managers don't like athletes, period. Forget wannabe athletes. Or that's probably the wrong word, emerging athletes, right? But wealth management firms do not like running money for professional sports people, right?
Why is that?
So, the average player will go bankrupt 5 years after leaving the league.
Just lifetime value of the client.
Mm-hmm. Recklessness, as they would say, because it's really their money if they want to do that. But see, I'll take the counter argument to that all day long. If you've got these, and I don't care if the kid's getting $10,000, $100,000, or he's the elite getting $1 million. I don't care, right? If someone helps them manage that money, it will grow, right? This wasn't money that they had. This isn't money that should be buying a house. This isn't money that should be doing that. That's money that should be reinvested in them. And if they, however small or large it is, that can be an insurance policy on everything. And that's not what's happening right now.
Absolutely. Not only does it demonstrate the lack of education being provided to the society as a whole coming into these products, but it truly demonstrates the incomplete product that they're providing to that audience. And if they're saying we hesitate to involve ourselves in certain arenas, it's because you're not serving that audience not well.
Mm-hmm. Well, you also think about investing, I always look at this, right? So one of the things I find is that younger people are much more savvy on trading. I don't remember my son was trading all through college, has quite a nice account, he graduated, but has quite a nice bank account and he's done pretty well. But I really kind of looked at it and I think the reason, and more people they're also gambling more than anybody did when we were young too. However,
and doing it in ways that they don't realize or traditionally isn't called gambling too.
But if you think about the skills that they're learning by playing video games, okay. It's an analytical mind. They're trading players. If they're playing sports, you're building things. You've got an economy. So these young kids at very young ages are growing up in this, boys and girls, right? In this something that we didn't have, right? And so, I think they're inherently data mindsets. I think they're inherently a different level, but I don't think we've done a good job. And I think this is part of the education, even in their classes or things, is that we're not teaching to the new mind. The new mind is building, right? 3-year-olds are on iPads and then they go up and then they get into gaming. I mean, the Minecraft, the analytical things that go into Minecraft. And then you start playing, your sports games and you're trading players. So what we're underestimating is that these kids are natively have skills that at least I didn't have, right? but we're not maximizing that. And therefore they're going out and they're getting their Robinhood account or they're getting these, which they're fine. But some advice along the way would be good.
And they are being taught in that process the inherent value of maximizing the outcome at every step. I mean, anybody that's playing video games at any level is, well, if you can save your progress along the way and roll back if you make a mistake, you're going to do that constantly. And it makes sense that is projecting that skill and those outcomes into the future to generate a future event is absolutely a valuable skill to pick up.
And, I also think that our traditional finance community, they're not marketing. I've argued with many of the larger banks because I had my kids, which were younger and on their own, who both chose to leave their bank that I set their account up. I said, listen, you know what? You're not losing the young people. You're not keeping them. Okay. My kids made their bar mitzvah. Where did they take their money? I went, took them. They set up an account at the bank that I was at.
Nice. Yep.
Okay.
Yep.
Until that wasn't working for them and they got older and they were making money working part-time or whatever. And, didn't want to go to the branch, didn't want to, like weirdness, but even so, right? A lot of these banks have SEC cards. Both my kids went to an SEC school. I went into the bank. I says, my child's going to Mizzou. Why aren't you giving a little credit card with a tiger on it? Right? Like, where they're going. I'm in this bank all the time, right? And so I believe that the financial institutions themselves are not doing the justice that they need to be doing because they're assuming other things, but they get these clients. They're just losing them because they're not keeping them.
No, that makes a lot of sense, actually. You've got to meet your clients where they are. And then sure, if you want to lead them to where you want them to go, great. But if you're not meeting where they are, you're not going to get there anyway.
I mean, how hard would it be for a bank? Like, let's say your parents set the account up and it was at anyway. I won't name any of them because I'm not going to think I'm picking favorites or something. But either a super regional or a global bank. Name any one of them. Mm-hmm. But, would it be such a bad idea for one of them to partner with, whether it's the Robinhood or I forget the one my son uses, right? But I mean, they've been trying to gamify their apps and they've been trying, I watched it for decades. Okay. They still don't have the inherent ease, fun. Give me some money today. I'm going to give you a bigger interest rate. You know what I mean? I mean, they don't do that. Whereas the other ones do to hook them. Okay. Like my son will move money from one place to another. He says, oh my gosh, we both offered me another 2% on my cash today. Right. So, that's how that happens. And they're buying into that. But kind of coming back to how they're building wealth, I don't think that we realize that they are building wealth. And I've got these two, I have my examples because I sit as watching these kids grow up in this new economy. My son has saved a lot of money. My daughter is much more creative and more of the gig economy than everybody else. And she's living a little bit more, risky. Whereas my son has a savings account, and all that kind of stuff. But she did hire a financial advisor. Okay. How she got that financial advisor, it was somebody that she knew from college, became one. And
Gotcha.
knew her, knew what she was capable of, where she was going. And he didn't care how much money she had. He's been to school with her. He knows her. And so he sees her as somebody that he's going to build, could build and could be a good potential client. But I don't see enough of that.
You brought up a great point about the old mindset and the old thinking. A few weeks back, I'm literally getting pitched hey, if you'll transfer and deposit a low 6-figure amount, we'll give you an extra $1,000 after 90 days. I'm like, this just isn't making sense. And no one, I don't want to say no one, but anyone that's younger that can use any random fintech platform or even an actual FDIC-backed institution can just go and open an account with a highly more competitive rate. And I don't understand why we're still doing things like that, irregardless of interest rates or.
I think that these incentives that the more modern fintechs are playing, right? The Robinhoods. And
they better understand the lifetime value of the client and the customer acquisition costs.
But I also believe that they built it at a time and built by people who were thinking different, right? I argue, completely digress side point. I mean, I talk about this when they talk about this mental health crisis with these young people. I don't think it's going to be solved until the people that are living in this world of anxiety, our therapy doesn't understand it. We've never been through it, right? We've got all these kids with all these problems that haven't been there before, and we're treating them with old methodologies and couch talk, right? The same thing's happening in finance, right? So it was the younger people, the newer people that were building something, right? And so because they're triggered by games and social and instant gratification all the time, these things that are offering these things, I mean, it may seem silly. I mean, you move $100,000, maybe you give $1,000, doesn't necessarily, the math doesn't work for someone like you and I, but that's, I'm getting something. I'm giving you something, you're giving me something, right? And not enough of the relationship building is going on. It's too transactional, and I don't believe we can sustain that, right? So it's how do we bridge that gap as we're looking at it? And if you look at the amount of wealth, I can look at it because I've got, late 20s. I mentor a lot of early people in their early 30s. I mean, I love working with young people. I love it, right? And I watch them, and I watch what they're doing in their money, and they're more frugal, and they've got more of it because they're not going out as much. They're not drinking as much. I mean, they're really, really a dreadful crowd, I think. But, they have, but no one's marketing to them in the same way. Because the big institutions, I do believe, I don't think I'll see it, but I do think you will see a change in the banking world. When we were chatting on our prep, we talked a little bit about the credit unions, right? I think you'll see things repurposed because I think the credit unions are kind of sitting there going, wait a minute, the fintechs didn't take over. The neobanks didn't take over. And I think they saw the opportunity because they're geographically located. Everybody's about hyper-personalization. If you think about a credit union, they're typically personalized to whatever, career, whatever, right? Mm-hmm. So I think that the fintech thing, I mean, I have seen very few fintech banks successful. I mean, even look at the Chime IPO. You know what I mean? I mean, it didn't do well. And a lot of the fintechs that I've seen in that area have gone after disadvantaged classes. Okay. Looking at how do we help these people with banking, with lending. There's a new bank that's going to start that they've launched. And I actually think they may have the ticket to some of this because they really realize where everybody's starting to bank for people that weren't getting banked, the underbanked, the non-banked. Right. There was still an element that was missing throughout that was actually at the end of the day, most of them needed legal services of some sort because it was still biased. It was still a lot of things, but they couldn't afford the legal advice on things like that. So there's a new bank that's going to start that actually has blended the bank with the legal.
Pam, we hear a lot about the transfer of wealth between generations, but you've emphasized that the future depends on building it. What's missing from the current conversation about generational wealth?
What I think is missing conversation and in that conversation is the talk around solo entrepreneurship, the talk around how do we make these, how do these people that start making their money, there's a lot of get rich quick facts right now. Okay. And so even in the large transfer of wealth where you've got massive money moving, okay, I've talked to many of them. They don't want to sit in a private bank in a dining room getting catered to, right? So I think the transfer of wealth has a high degree of risk and opportunity. And I think the opportunity in wealth transfer is wealth growth from the younger people that are coming up that haven't historically been wealthy families. And young people are making a lot of money, but I don't think they realize that their money isn't sustainable. Because if you're an influencer, if you're making it quick on whatever, quick things, okay, that's not a sustainable economy. That's going to shift like every other thing we've done. Okay. Yep. But I don't think that the people they spend it. They love luxury things. Young people are eating caviar on freaking chicken nuggets. I don't understand that, but so one, we got to capture that. And we got to rein it in a little bit to make them realize, and whether that's letting them invest in a startup or a stock, but make them understand that they don't have to manage it themselves. So I think that those people looking at managing money, I know a great guy in Atlanta. He started his practice in his basement for $12,000 to go after startup founders. Who was the worst person on the world to manage money for? A startup founder, right? They don't have any, or they're spending it all, right? But it was to teach them about how to use it, the tax advantages, tax credits for development, right? How do you pay people? How do you set up your option pool? All these things that if you actually set that company up right, your chances of success, your chances of funding, your chances of everything go dramatically up. I mean, I've started many companies, we understand that, but these kids are starting a company like that. And now with Gen AI, and they all think they can build bots. Okay, you set those up wrong, you become at the tail end, and you're upside down with your first investment.
Yeah, God forbid you raise multiple safes at different valuations. So,
this man's name is Samuel Dean, and Samuel really targeted that. And he did it for a little bit of money, but he went for the long game. And so I think people got to look at some of that and go for a longer game. Okay. I also believe in this wealth transfer at the top. Okay. They need to start bringing in new people. This industry of wealth management, sorry to say, is still pretty old looking. Okay. I still don't go to a conference and there's still not a line for the bathroom. So until I have a line for the bathroom, I know we're not making progress.
I love that. That real talk here, folks. I love it. I want to go into more detail about your work at the Founders Arena and how you help innovators close that gap and actually create new capital instead of waiting to inherit it. What does that look like? So our goal at the Founders Arena, and honestly, if I could have called it something other than an accelerator, we probably would have. But our accelerator is boutique. It's laser focused on the categories that we look at. So everything we're doing right now is within wealth management. That was a decision we made because of some of the topics that we just talked about. There's not enough technology to support how the future generations will want to work with their money. Okay, so it has to be the balance of the right custodian and the right leadership and the right management around that money, but also the tech that enables people to understand how to use their money. You know what I mean? That's part of it. But the real part is that I felt that, I don't care how good you are, I don't care how good your product is. Selling into anybody, particularly Wall Street of any magnitude, is hard. Okay, and and you think about it. There's so much product. There's so much stuff. How do you get to people? How do you make cold calls? How do you get through? The whole art of sales, which I fundamentally will fight for to the end of my life, because I believe that sales is a contact sport. And until we come back to sales being a contact sport, there will be winners and there will be losers and there'll be nobody in between. And so I focus these founders, and they know when they come in, it's about how do we connect product buyers and product sellers in a manner that's efficient, effective, yields an answer in a faster period of time. Because essentially, if a founder can show revenue, they control the money table. And that it doesn't have to be millions of dollars, but if they can show I'm actively closing deals, they are not codependent on a venture capitalist. And I call it codependencies. I know lots of founders that are codependent on capital. And your codependency on capital is because you don't know how to sell. Okay. And so my goal is finding the companies that have the most potential, that already have got, and they don't have to be salespeople. And most of them aren't, for goodness sake. There are technology guys, and more they're technology guys and girls, that haven't, even sold a Girl Scout cookie kind of thing, So it's the ability to and I tell founders, I said, in order for you to be successful and get the capital and all the things that you want, you wear your scrappiness with pride, not shame. Bank, you're selling into an institution, I don't care, big, small. They're like, oh, but is that vendor reliable? Are they going to be in business if I put them in? Blah, blah, blah. Okay, fine. Yeah, that's a very strong objection. But if you ask them for a free POC, if you don't pay them for the services that they're giving to them, you are helping make them die.
You are basically creating the risk. The founder isn't creating the risk. So I don't believe in free POCs. I don't even like the word POC, okay? Because if you think about a POC, when you're selling into a financial institution, it's a behavioral thing, honestly. POC means I'm going to try it. I got to figure out how to break it. If you call it a limited license, they think about how it's supposed to work. Okay? So I encourage everybody to write the full contract, because the last thing you want to do is get in there and get through the process and waste your resources and waste your time and then be done. And then they say yes. And then they go, and the procurement person who has no power in these institutions at all, but does have a big red pen that can say, oh, no, they didn't pass our risk and compliance test. So I encourage founders, and we help them do this, de-risk themselves before they get there. And you can only de-risk yourself as a startup by wearing that risk with pride and explaining to them, if you want me to do, all these, it's a shout out to the banks and the wealth managers and everybody. I mean, every time you ask a startup for something for free, shame on you.
No, that's good. And so are you encouraging them to define the success criteria to lead into the next phase, or how do you bypass that?
The whole idea is that if you can show them a steady stream of revenue and how they can start really managing the pipeline to close and actually, because getting into some of these bigger financial institutions is not easy for anybody, and I don't care who you are, right? It's hard. So if we're able to capture that, right, they may not be ready to sell to a Schwab, UBS, some big wealth manager yet, right? But if we get them in the room and they get their insights and they understand and they know well enough that they're not going to be able to do business with them yet, but we can get the validation that they would. Okay. Like, yes, we have this gap. We have this need, but yeah, you're right, Pam. We're never going to get them in. Right. So we move them to be able to get them in. And what gets them into these places that de-risk them is new business. So you've got to be really, really strong and really help these startups focus on market segmentation. And I don't mean whether you're selling to this person or that person. What's the size? What's the jurisdiction where you're going to get the most amount of momentum, right? So, and then what will be the phase two? But what we can help them do is get into some of the biggest firms. Some are ready for them, some are not. But at the same time, the ones that are not ready for them, is the solution strong enough that if they were a little bit stronger, they could do it? And also what's come out of that is many of these guys have strategic balance sheet funds. Okay. So what we've seen is more strategic balance sheet money going into some of these companies and straight venture capital. And I would argue for that every day of the week.
Yeah, that makes a lot of sense.
We kind of pair. So we pair with, but it's really about product makers, product buyers, being together, helping them accelerate that stage, but also not being discouraged when somebody larger might not like it. But the other really valuable part of this is not everything is a company, right? You see a lot of features, right? And so the other thing we can help people do is, have they built a feature or have they built a product? And if you've built a feature, then you have to really quickly help them align with who the best partner would be for that feature. Because you're never going to do calling, smiling, and dialing, getting sales on a feature. You either have to pivot that into a sale, you have to pivot that into something else, or start a new company and do something different. That's
really good advice.
You know who's the best at building features?
Who?
Companies. Ex-bankers. Guys that have been in a bank forever and then they leave. It's that one thing that they did every year for 30 years and they build it and everybody needs this. I'm like, yeah, not really.
No, definitely. And for a long time, the advice was go earn your right to find the missing piece and then go build it. And outcomes sell easier. And you were hinting that success will come from being able to sell the actual value that's being presented, and you're not going to be able to sell at that value level without strong sales support. Am I understanding that correctly?
I think most people are afraid of sales.
Without question.
Okay. And as I tell, and you can't be an entrepreneur and be afraid of sales. Because if you are not your biggest fan of what you're doing and want to tell everybody about it and not be able to come up with the feedback of making them, that's a problem, right? And it's nothing other than fear, right? And so, people have been in sales, like I have my whole life, you learn rejection early. Okay. But a lot of these brilliant founders, a lot of these people are not salespeople. And unfortunately, I spend a lot of time, I worry about the future of sales. Okay. I really, really do. I think that we are not using, as I said earlier, it's a contact sport. Okay. And you can't be hide behind the screen, and you have to be able to have conversations, and you have to be able to get on airplanes and see people buy from people. And I just cannot fathom that will ever change. It will be more automated, perhaps. Okay. But you can't lose it. And, how do people generate cold leads now? I mean, the whole art of telemarketing is gone. I mean, do you even pick up a number you don't know? No.
Yep.
Right. Emails are crazy. I got the best thing. I met with a founder about 2 weeks ago. I don't have it in front of me because I came to, it's in the other room, but I got a card, handwritten with all the details of how I helped him and what it was. Okay. I promise you I'll take that I'll take that kid's call anytime he calls me.
There's an inherent in order to get the sale, to close the investor, to get your foot in the door, you need trust, you need value proposition. And I can see where the trust is becoming more and more critical, because at this point I'm not opening an email. I'm not opening a LinkedIn message. Everybody gets constantly inundated by brute force marketing, and I think we're all sick of it. Now, somebody that I know calls me up and says, hey, you need to talk to this person. Well, guess what? I'm doing it that afternoon. And it comes down to trust.
And we have to do that. And that's really what we're selling. And now that you put it so eloquently, right? We can pick up the phone and they will look at them. But anybody that when I will refer somebody to somebody,
mm-hmm.
They do pick up the phone, and I there's not a solution. It's not automation, but it is really just, we don't teach anything in school anymore. I mean, I don't mean that kind of funny, but why aren't there sales classes? Not fundamentals of sales. Okay. Just let's have, it's really funny. I was speaking at the Women's Business Association at UT Austin last year. Whole room full of great future business girls, right? Do you want to know what I thought the most fascinating question that they asked me?
What?
How do you network with men? That's actually
a really good question.
I was almost stumped, to be honest with you, because I was like, I've been on Wall Street for 40 years. Okay. I mean, back to my no line in the bathroom kind of thing. Right. So I was like, wait a minute. I actually network better with men. You know what I mean? So it was there. But I asked them, I said, I said, I paused and I said, well, I can tell you a way you could get started. I said, do you guys do socials or, fraternity parties, sorority parties? They have all this stuff. I said, you should start having networking minglings with the Boys Business Association, not a formal, not a dance, right? Create these communities if that's your issue. And the boys have the same issue, I found out.
Yes, that is such a needed skill.
Right. So I said, instead of these things, you should create a networking event where you're all together instead of a dance, instead of, these kind of things. But, it really was interesting. And I think it's an opportunity. I mean, then that's on a small school down there. These are kids from all over the country. I mean, it's not a local, it's not a local school. It's it's international. I mean, it's
right.
People die to get in there. You know what I'm saying? So, so I believe that we have to really, and it's a community thing amongst all of us. And we could talk about it through the lens of finance, but let's talk about it through the lens of venture capital. Okay. Poor founders are calling up the venture capital people. Okay. They don't return their calls either. Aren't they supposed to be calling them back? right? So if you actually need the lead to get to the guy, which, okay, forget the Valley for a second. Everybody needs a lead to get in there, okay, because that's fine, right? But in New York, here, that to me is the most asinine part of all of this. Okay, that these venture capital guys don't have office hours, don't meet with people. I mean, if you're only meeting with people, you're only doing it on referral. I think they should be a little bit bolder in how they're reaching out to people.
That explains a lot of the groupthink that we currently see in the way fundraising rounds are becoming, and really the sectors that are getting the funding as well.
But if we kind of go back to the wealth question, right? Even if you take people that don't have a lot of money, and people that don't have a lot of money, or well, I shouldn't say not a lot of money. Again, wealth means what it means to them. And you've got money, you've got some of your savings, right? Why can't those people get access to private deals? Right? I mean, it's not like everybody's putting in $200,000 in a startup. I mean, I've got 10,000, moved around to a whole bunch. Right?
Absolutely.
Or 5,000. Okay. But and that's wealth creation, giving them access to instruments or sources of investment that they don't have. I mean, buying one share of freaking, Tesla or, whatever the flavor of the day is, NVIDIA, right? 5 shares of that isn't what $5,000 in a startup could do.
And we're not asking for much here. It's truly providing access to deals they typically wouldn't see at fair valuations.
Correct.
That's providing massive value to the investor.
And probably, providing also peace of mind to the founder, okay? Because they're not going to be asking him for 9 million meetings and crazy questions that they shouldn't be having to answer yet. You know what I'm saying? So, but all of this, it's not negative. It's called opportunity, right? And we have to have conversations like this. And we have to make these conversations broader to people. I bang on about all the time, right? We somehow focus on sometimes all the wrong things. But right now, if I believe it's incumbent upon people like myself and other colleagues that I have that have been around this place a long time, who've seen 6 massive changes of sales cycles, who have seen, let's be clear. Okay. You tell me a fintech unicorn other than like a PayPal. Okay. We don't make unicorns. We buy unicorns on Wall Street. Okay, we don't make unicorns. We just buy and buy and buy.
You got to be a unicorn to even get your foot in the door,
right? To scale into these big companies. So now we have a conglomerate of everybody else's things, right? So who makes all that money? Private equity makes all that money.
Companies taking longer and longer to IPO. Whenever I started, it was around 7 years, and last year it was 14 years. And if you're going to wait 7 to 14 years to have that IPO, well, it's pretty clear all the value creation and value incubation has already occurred. And if IPO was typically exiting onto the back of the retail investor, that's exactly what we see now. And it describes hey, flip a coin, it may go up, it may go down. The value creation's been done.
So it'll be interesting to watch the Texas Stock Exchange, because if you're reading the smaller print and visiting with some of people around it, I mean, I don't know how it gets solved completely because they still have to follow the rules of the SEC. But, it's just like the Toronto Stock Exchange has incredibly aggressive programs to be able to get smaller companies to float. Okay. And so if you're reading any of the subtitles around the Texas Stock Exchange, which will start trading next year, right? And at the same time you had that, what did you have? You had NASDAQ and New York. We're going to do a list now down here, right? But the words around the Texas Stock Exchange are, it's going to be easier to float earlier. Okay. The only thing that I still will challenge to these conversations, if you still, the issue isn't always could you float, can you make money? It's the SEC and the cost of being public that is prohibitive to some companies as well. You know what I mean? I mean, the paperwork, the money, it's the administrative overhead that is also part of it, not just floating.
You better believe it. Not just in the, okay, we need to get everything ready for a PCOB audit, but also the tremendous amount of legal and documentation and everything created along the way to make it happen. It's truly a significant expense.
Yeah. But again, these conversations like this are the important part because, do we all want to live in a world where we don't have any human contact? I mean, to your point, if you pick up the phone, if I pick up the phone, we're going to introduce somebody, they're going to get the meeting.
Yeah.
Yeah. It's like when I didn't get my son a job, but I introduced my son to a whole bunch of people. He kept going on LinkedIn looking for a job. And I mean, one time he got a rejection in 10 minutes. I said, right? I said, you write back to them and you say the robot's wrong. Okay, you just tell him that, right? He's not as brave as me, but I said, click that message. Okay, take a copy of it, go to the contact us webpage at that bank and put it on there and say, really? Yeah. Right? But he networked and I taught him how to network, right? Again, back to the girls at UT Austin. How do I network with men? Right? It's the same thing. So what our takeaways here are really, because it all goes to building wealth. What is wealth going to look like for our kids, for the kids, for that, right? Well, we're having this conversation today. We can say, well, this is what the wealth transfer looks like up here. You got a bunch of really entitled young people, right, that are getting their money moved and they're taking it out of the safety of some of the big players and moving it into, I'm not saying you shouldn't, but you can play with some money. But there is still something, if you have that much wealth that belongs in a real custodian with real guardrails, right? And not as a sponsor bank on your platform, you know what I mean? But it's also, how are we going to create the wealth? And it's not, I think they're creating the wealth, but we're not teaching them how to sustain the wealth. And that's bad for the economy.
So let's dig into this. We previously discussed, Lane can edit it. Pam, share what you think is happening with Gen Z and younger millennials as they shift in their financial instincts, or the shift that's occurred because of how they've grown up on technology, gaming, trading, and building worlds online.
So I think we put in the positive bucket. Okay. They're astutely smarter, I think, than I ever was at that age. But the perception is they're not. I think they are, because they've been built with analytical minds. They've been, what is the biggest currency in the world right now? It's data. Okay. And they understand data almost natively, right? They understand the analytics more from the thing we talked about before, right? The gaming, the Instagram, figuring out algorithms so their persona can, think about it. Young kids are figuring out how they get more likes, right? So
yes, they're inherently understand algorithms at a basic level and how to drive outcomes.
The other thing they know is brand, personal brand. They know that really well, right? So these are all traits that we didn't have, or I didn't have at least, right? And they're much more conscious of, what's out there. I might argue that some of these lives are alternate reality lives, okay? But nonetheless, they can manage their brand. They can manage the thing. So their skill sets, I believe, are far superior to younger generations.
Without question, they've got a better understanding and more experience of the skills that typically our generation didn't have going into the sales role or the need for sales.
Yes. But what they don't have is any kind of real financial baseline. Okay? But they're making money. They're gambling earlier. They're gambling a lot earlier in the places that you can gamble. They're investing earlier, right? But they're not investing to a thesis. They're getting their thesis and they're getting their advice on Instagram. I saw some 14-year-old the other day on Instagram talking about, what stock to buy. And honestly, I played it, I looked at it, and then I went up and researched the stock. He wasn't so wrong. Okay?
That's fantastic.
But what is he getting for it? So I believe that we have to harness that in order to kind of rebuild. And this is one of the things that I tell the younger people that I work with or I mentor, or even my own kids or their friends, right? You have to be respectful of the things that came before you and be wise enough to learn and understand it, because in order to change, you have to understand where it came from. So they just think all these banks are stupid. I can't get my information. You don't call me back, blah, 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 blah. What they don't realize is that data is sitting on a mainframe that's been there for 40 years, right? And they don't have that single view of the client. They don't have some of these things, right? So because they can't get it from some of the larger institutions, that are trying really hard to stay in the game, they're going to more risky alternatives because the riskier alternatives give them the workflow that they're comfortable with.
Yes, 100%. And you mentioned financial literacy and us not serving that audience. How should our financial literacy efforts evolve to match how they're actually learning and how they perceive risk?
I think that for these kids coming out, I believe any applicant, and I don't know of one, so but I think that there needs to be more gamification in the communication that we have with our financial institutions, because that's what they understand. Okay? They understand the data, they understand the gaming, they understand that. So if you can prompt them, and we can with AI, we can with these things, prompt them sometimes. So if they're going to go all robo, right? I believe that even in those scenarios, the robo should be asking more questions about the things. And so if AI is going to be the solution and we're going to do robo advising and all that kind of stuff, then I think we should start training the algorithms for the guardrails, right? Like if I go into Robinhood at midnight and make a trade, okay? I think there should be guardrails in there, even for me. Okay, because sometimes I'll be watching something on the news, right? So if you have the opportunity to trade, move your money all the time on your phone, okay?
That's a good point.
You do it when you're altered from being at a party. Like, let's say these kids are at a party. I mean, I know they don't drink a lot, but they're at a party. They come home, right? There's like, they heard this tip. They did this, right? You're instantly doing it. They're not being thoughtful. I think there should be some cues for some of this stuff that enables them to be able to think about it and not react so fast. And I think that's how we help them with financial literacy.
At a basic, so this is interesting to me because at a basic level, decision fatigue will absolutely kick in for every person. I mean, this is the reason that late at night, I'm more likely to snack on cheese and crackers when I should be sleeping and making bad decisions instead. Our system isn't designed to create those guardrails. We're not enforcing it. But the truth is, companies that empower people to gamble with options or make other potentially negative decisions, they're better off if that client has more money in their account. Mm-hmm. It makes sense to, in my line, an investor can only take so many punches, and protecting that investor network, protecting your book of business, helping provide quality product to, I can't create riskless opportunities, but there are conscious decisions that can be made to create the likelihood of a successful outcome. Why aren't more companies thinking like this?
Because they haven't had to, because they think, I think that we treat the symptom, not the problem. We build to the symptom, not the opportunity. Like, if you're really fundamentally building to something that has to go in that direction, I mean, it could be something, I mean, just think about it. Technology's there. Let's say, just use a trade. Somebody hears something at a party, the market goes down. Yeah, they buy. What would kill them from saying, how much different could the price be in 6 hours when it's daylight? Not that much. Right? Couldn't swing that much overnight. You know what I mean? And so you could even put an incentive in there that says, if the price went up or something. But I just don't believe that we build to the moment. We don't build to the future, the real future. I mean, some really people do, because our capital is not patient. Capital is not patient. Capital needs to do something, right? But I do believe that really the overall solution to some of this is going to be reversing this data economy and reversing the privacy economy and the compliance. And what I mean by that, okay, is that, the average the average per person money that Facebook makes on data is just under $4,000 per person. Okay, so multiply that to all the other people that are taking the data. So I believe that we have to circle the world and come back in a way where we, as we're building this data, and the people that start doing this, I think that will win. As they're building this data, it's like, it's like the safety deposit box you used to have at the bank. Okay, but this is my vault of data. I own this data. I give you the data, right? How about when we go to a website where we're actually giving our credentials and not following everybody else's privacy laws, right? Everybody clicks. And so I think that part of the shift needs to come back, because I think institutions, and I don't care what industry it is, they're worried about cyber, they're worried about privacy, they're worried about all of these other things that could be a liability to them, and therefore are not making the proper investments in really the infrastructure that needs to start being laid in them, because it's too hard, right? If I've heard once in a bank, I've heard it 40 times. Pam, why would I make this massive change in the technology? I'm retiring in about 6 years. Okay. I don't need another conversion on my watch. Right. And it's hard to convert in healthcare. It's hard to convert in retail. I mean, we happen to be familiar with our world, but the same thing exists in all these other places.
In an ideal world, what would be different if fintech was thinking about the actual people and the users and prioritizing them and their successful outcomes?
I think that if financial services, and this could be done through wealth management at the right level, or this could be done with your community bank or your credit union, is, giving us that vault, giving us the things that we need, giving us the keys. And they've tried this. Okay, I'm not saying they haven't tried to get something more hyper-personalized, but they make it a charge. It's like some little, I like checking out a GoDaddy. You want this, you want that, you want that, right? So it all becomes this add-on because they made some partnership with some startup that might have a widget, okay? So I think that we've talked about know your customer. We've talked about all of this for decades and decades and decades, okay? Do you think the average bank really knows their customer?
No, because they would be serving different products and meeting them where they are.
I also think that we've missed the boat, and this is where I think that we can change. If we start focusing on the younger people, right? Your banking relationship, your financial relationship should be like the circle of life, right? You come out of school. Okay, well, wait a minute. What are they all coming out of school with? Student debt. Okay, why aren't we looking to refinance the student debt? Why aren't we creating some kind of instrument that enables them to offset that, right? Or make money. I had an idea years ago and told me it was like slavery. I'm like, I'm not talking about slavery. I'm talking about, if I could invest, I'm going to bet on my son, right? And I said to a bank once, I said, listen, if you had a kid and they had a student loan, right? What if you offered to offset the student loan payment every month, but in exchange for that, they had to deposit the money. They had to save the money, right? So if the student loan payment was $100, if you make a $100 payment every month, we're going to wipe your student loan away. I mean, there's a lot more. It's not as easy as I realize, but we can get someone you buy that. Okay. There's a whole different thing, right? But now what you're doing is you're forcing them to take that same amount of money and save it. You're not saying I'm wiping your loan away. So now they're creating wealth, right? And now know that they're about to get married. They bought an engagement ring, right? Are they going to look for a house? Are they going to look for this, right? So you could start by being able to take them at that critical point when they're out of school. Maybe maybe they don't have a job, but they got a freaking student loan. Okay. So we have to work on how we fix that. And that should be where the relationship starts. And if you start with that, and then the circle of life, and then they'll buy a car. And
it naturally leads to the next product. And
they'll have, a house, and then they'll need insurance. I mean, but you're getting it there, but we're not doing any good if we're not all collectively figuring out how we get these kids out of student debt. And it's not wiping it away, and it's not the government, and it's not, we make these things, it's not anything, but we take these big items that are so personal. And the fact is nothing happens in the government. Nothing. Okay. And it's not a political statement. But the fact of the matter is who solves things, who makes change, who does things is people, right? At private institutions and building companies. Okay. And if we look at the amount of billionaires in the world, we want to tax them. We want to do this. Okay. Take their tax and put it into a fund and create the student loan program. Right? And then you give some of it to all the banks, and the banks get to, that's how you fund the banks. You don't just give the banks money because they don't know how to manage their business, right?
Right.
But I think there's other ways as we're looking at taxes and all of this stuff, because I don't think if we don't, I mean, God, I'm not going to be here to see it, but
we're just going to get more of what we get.
It's sad. And kids are depressed and they're sad and they're scared. I mean, my kids are 27 and 22 and I've lived, I've had, my daughter was the first one to have a phone in middle school. Okay. I've seen the outcomes of that. My son learned very early that he couldn't game for so he set best practices. And it's funny because he's not on social media, where my daughter is all the time. But his sister said he wasn't going to get a job out of school because he didn't have a social media profile. My son's got a bank account worth a lot of money because he worked. My son doesn't have any student debt. He got a scholarship and we helped him not have that. Okay, so there's a little bit of that, but he got a full academic scholarship. Chose a state school to go to, not an out-of-state school, but our family alumni, right? But if I look at the two of them, but him not being on social media, him not having a profile, him not having that, my son got employed by EY, and he's on one of the largest accounts at EY, and he had a job before he left college. Okay, so this nonsense that you have to be at the right school at the right time, the right social media, the right everything. No, he networked. And he networked hard, and it took him a long time, and he had a lot. He was scared, and he couldn't understand. But he kept at it, and one network led to another. It wasn't just mine. I introduced him to somebody I knew, and then they introduced the network effect.
Referrals, that's the key. No matter what you're doing, what you're selling, investors.
I have a lot of passion for the topic, and I have a lot of crazy thoughts on the topic because I'm watching it in real time. And I'm watching all their friends who call me, and I've had many of them intern. And this summer I had 2 interns. I had 10 high school interns last time. I'm going to have them again this year, right? And I don't have them do, I don't have them do intern work. I have them build companies. I have them do analytic things. They're not pushing my paper. They didn't get my coffee. They're sitting in every meeting with me. I had one kid from Berkeley. It was a girl and a boy. They didn't know each other this summer, both incoming. They were both going to be sophomores. And I had them build a business plan about creating a fund for young people to invest in. Because all their friends are starting businesses and this, right? So I said, I'll tell you what. And they wrote, I'm going to show it to you privately because you're going to like it.
I would like to see that. And the moment you've got an opening for a high schooler, I've got one to send your way.
I'll do it all day long.
Quality. If there was ever a group of people that needed that skill set the most, it would be entrepreneurs. Oh my gosh.
Well, that's what we said earlier. Entrepreneurs and kids and schools need to be getting the same kind of money that sports people are. One kid can change the world. I realize one athlete can do well too for a school or for a city. But, just think if we were paying as much attention to the entrepreneurial students as we were to the athletes,
sure, the
world would be a much better place.
Or even if we were focused on empowering the small businesses that are doing the hiring and economic growth.
Yes.
It would go a long way. So your background is fascinating. Let's talk about purpose, resilience, life outside of work. Beyond your career, you've faced major life changes and you've continued leading through them. How did those experiences change your view of success and impact and create who you are today?
Well, my history was pretty, I was on my own at a very young age and penniless, homeless, and for a variety of reasons. I've battled cancer a couple times. I've been sober for 16 years. So I just don't ever believe in looking back. And I do believe that we all have to, we have to love ourselves and trust ourselves and respect ourselves a lot. And I don't know what got me through all of those things, but I never stopped working. I never, people laugh about it. But it teaches you resilience. It teaches you tenacity. But from an entrepreneur perspective, right, you have to be your biggest fan. And that might sound egotistical. Okay. But like everybody, I live with tons of fear. I live with all kinds of I'm a much better coach of other people than I am myself. in my business practices. But I got driven at a young age because I didn't have a choice. And I always look at entrepreneurs, and somebody asked me the other day, what do you look at in an entrepreneur? And I said, I look for the tragedy that they experienced. Because if you find an entrepreneur who has had some kind of tragedy or overcome some major obstacles, that's why I think some of our education, some of our schools that aren't as fortunate as some of the other ones, that's where we should be focusing on entrepreneurs, because the best entrepreneurs are ones that have come through unconscionable things sometimes. Right? So it's I always say, trust yourself before you trust others. And I try to raise my kids in the same way. But the thing is, when I was going through many of the things, right, I didn't want to, I was just in a situation, but I didn't want to be defined by that. Right. So, no one ever knew a lot of these things. In fact, I don't even know if some people knew the early story of how young I started it. I lied about my age, by the way, and I got a job. And so on my 21st birthday, my company had a big party for me and I couldn't get in the bar because I wasn't 21.
I love that so much. Nice.
But, I think you got to give back to people. And if you don't always, at least once a day, find something to give back to somebody else and make time. And so when I get called from young entrepreneurs, or when the kids have interned for me and they go off to school and they call me, right? I don't always return every cold call. I try. I take every call. I tell them I'll call you back at dinner sometimes. But you have to do something for someone else at least once a day. And the other thing I do at night is I do two things before I go to bed, and I tell entrepreneurs to do this. I said, you got to write down I do journal, but everybody's journaling this. People don't have that kind of time, but what is important is to check in with yourself every day.
Yep.
So before I go to bed, there's two things I do. I write down, how do I feel? Just one word. Happy, sad, anxious, mundane, whatever. Just one word. And the other thing I write down is, what could I have delegated today? Okay. Because what happens is when we're building teams and we're building companies, sometimes we think we need that next engineer. But if you have everybody on your team writing down what they could have delegated today, you sometimes find out that the one thing you need isn't what you think you need. That's
really good advice. So I time block every evening and essentially what went well, what didn't, what's the most pressing item for tomorrow. And taking the moment to just revisit the day and what you could learn from it and focus yourself for the next day is invaluable. And I like the way you're focusing that. That's really good advice, to take a higher look at the actual need, because you're right. I guarantee most times it's not what you directly think, especially at the organizational level.
And the other thing I do is I sometimes do it externally, not as much, but always internally with our teams, or even at home. We check in, like before we get on a team meeting, right? How are you feeling today, right? Because we have to give our colleagues permission to not be okay, right? But if we don't know they're not okay, we might start holding resentments against people. She was such a bitch today. Whatever. And so it's important, because not everybody, something could happen. It's not our business what it is, but we want to make sure that we can express to people, it's okay not to be okay. Okay. I would challenge you one thing you just said, though. Yeah. You said you focus on what the big event for the next day is. Something like that, right? When you're doing your end of day kind of journaling.
It drives my to-do list. Ultimately, as I pick up from there. And please.
I might challenge you on that a little bit. And I might challenge you to say, take the day, take how you're feeling, take the win. Okay. But if you go to bed thinking about tomorrow, you might not sleep as well.
I promise you that's my big challenge. Yeah.
So it's, we all do it, but do it before you leave don't do it at night. Do it before you leave the office, or get up a half hour early and plan your day that way. Because I just think that if you're going to bed thinking about the future, you're not getting the type of sleep you need.
100%. I want to follow up one thing. resilience seemed to be a significant driver that got you here. What role does resilience play in how you lead both people and companies today?
I think in a lot of ways, no one's ever asked me that question.
I respect your tenacity and how the grit, determination, drive that you're just going to make this happen and not give up and ultimately find success by doing the right thing every day until the right time happens. That's what how did that change how you interact with others now?
I think my interaction with others is, I'm very coaching. I never had, I was kind of self-made, School of Hard Knocks, the whole thing.
I see that.
And so I think I'd lead with a bit of maternal instinct. I lead with, trust me, not always. I've been known, I've thrown a Diet Coke across the room. Okay. So like, I'm not perfect, but, people think that I'm a control freak. And the funny thing is I'm quite empowering. And I actually will give people, probably more chances than they need sometimes. Right. To find the good. But one of the things that what I am good at doing is before you just throw out the baby with the bathwater is you've got to really understand what they're good and bad at. Right. We all make bad hires. We all bring teams together. But what has to happen on a team is it has to be cohesive. We have to trust our peers. And I don't stand for, pouting. Like I had a sign once, and my girl and all the ladies that listen will get mad at me, but I had a sign once that said "No girls allowed here" because I don't like drama. Okay, but I've soon to discover that right now in my life, all the men are causing the drama. Okay,
yep, so yep. Oh, we're just as bad. I guarantee.
It's not a one-hit thing,
yeah.
But I over communicate. Okay, because over communicating. Yeah, I could get in trouble with an investor. Yeah, I could get in trouble for over communicating something. Okay. But you'll never lose trust for over communicating. Right. And so whether, at one point, when you're running out of money, I was promised people on my team. Okay. One of my last companies, you will never get it. You will never come in the door. Will be shut. Right. And I was known when we were short on cash at some point, I would call up people and I would get somebody a job and I'd say, okay, but I'm going to hire him back when I get money. Okay. Right. I had a husband and wife once working for me. I'm like, I can't take this. I don't know how you guys are doing it. Okay. But one of you's got to get a new job. Okay. Because this is a little too intense for me. You both working here. Okay.
Gotcha.
So it's really giving the opportunity. And when it's not right for somebody, helping them bridge where they need to go next.
Boy, that's dedication.
And, but over communicating, and more do as I say, not as I do. Because I eat, live, and breathe work.
Sure. Yep.
I mean, my son's first word was BlackBerry. Okay. So just so we're clear. Okay. And that wasn't a proud mom moment. I got home one day and my son is going, Bubba, and I looked at the nanny and I'm like, what is he saying? And he's saying BlackBerry. I'm like, oh, so he thinks I'm a BlackBerry, right? And it's also do as I say, not as I do, because everybody needs a bit of balance. Everybody needs their time. And I will tell you that I don't regret any moment of it. But, I've been to every part of the world I could possibly imagine. And I could tell you I didn't see enough of it. But what I did learn is a lot about the people. So I may not have seen all the wonderful things about the country, but I did learn a lot about the people. But, I encourage people to make sure that they take the time to enjoy if they have the chance to have experiences like I've been able to do, take a little bit more time to enjoy them, stay an extra day, do those things. And, I've always treated him. It's like even on expense accounts and things like that, you treat my money the same way you treat yours. But I think if I summed it up, it would be more about over communication and, contrary to popular belief, I probably keep people around longer than I should. Okay. Because I believe in help. But if not, you give them some place to land. I don't know if that answers your question because it's an excellent question.
That was a good answer though. I like to end our episodes with a fun anecdote about my guests. I really enjoyed your story about your 21st birthday party / business party, which says a lot about your dedication. Can you share a story, a fact, or an experience about yourself that people may not know, but our listeners would find entertaining?
I was married once at 19.
Okay.
And nobody knows that. But I've been wondering, it was like 9 months. Okay. But that was one of my early mistakes, right? I don't know where I'd be with that. Not a mistake. He's a wonderful person. It was very young. Actually, it wasn't it. I was just turning 18. But the roundabout that lasted a year. And then I met my husband, and I had been with him ever since for 40 years. We've been married for 36 years. So people are always like, you got the 2 kids, you got that, you've been married for that. So fun fact, I was married once.
Nice. That's fun. Pam, thank you for sharing your story, your perspective, and really where wealth and the next generation are headed. Your work reminds us that innovation means more than algorithms. It's about people, purpose, and how we use what we build. Folks, if you enjoyed this conversation, subscribe to Planet Wealth on YouTube or your favorite podcast platform. Leave us a message in the comments about this episode. I'd love to hear from you. I'm Lance Woodson, and thanks for listening to Fortunes of the Brave. If today's conversation sparked your ambition, subscribe now and join a movement committed to bridging the wealth gap. Every episode delivers insights that can transform your financial destiny.